Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 11th of August, 2021. And we're producing our gold and silver morning update and price forecast for the day ahead. This morning we see gold and silver prices edging up ahead of the US CPI data and core inflation data due to be announced in a few hours' time. And we discuss the variables which could affect prices today. So let's take a look. Welcome to Illuminati Silver on this rather serene, yes, the word today is serene, Wednesday morning, 11th of August at 10:16 a.m. GMT +1. But the news is not that serene. In fact, there's quite a lot of interesting stuff here. The global economy is shrugging off the Delta variant for now. Really? What's going on then? Let's have a quick look, just a few seconds. The GDP nowcast shows 1.8% expansion in Q3 as US inflation peaks. Even as Delta risks loom, early signs from the third quarter show growth accelerating and inflation peaking after its recent jump. A reassuring sign for policymakers and investors worried about the risks of faltering demand and surging prices. Global gross domestic product in the third quarter is on track for a 1.8% expansion from the previous 3 months, according to a nowcast from Bloomberg Economics. That's an improvement from the solid pace in the previous quarter and leans against fears that the Delta variant will slow the recovery from last year's recession. At the same time, consumer prices are set to advance at a less troubling pace as inflation, which we'll find out today, in the US peaks and then eases back from elevated summer readings. That will be welcomed by central bankers such as Federal Reserve Chair Jerome Powell, who had bet the inflation spike would prove temporary. Now, what does that mean? Does it mean, on the one hand, that if the economy is robust and inflation is not going up, we have a slight contradiction in terms? With the economy doing well, it means it needs less stimulus, so you would expect the central bank to pare back its bond buying. But of course, if inflation is falling, then they do not need to worry so much about increasing rates so quickly in order to stop the rise in inflation. So we have a slight contradiction in terms. What else is in the news? New Lloyds CEO has wealth at top of a packed to-do list. Now, this is the bank from which I originate. New Lloyds CEO has wealth at top of a packed to-do list. Lloyds Banking Group's PLC incoming boss Charlie Nunn inherits one of Britain's biggest jobs in finance next week, with its wealth offering and pandemic recovery at the top of his to-do list. Nunn, who previously led wealth and personal banking at HSBC Holdings, is joining days after Lloyds announced the acquisition of Embark, an online savings platform that it hopes will attract more retail customers to its wealth services. So we can see where the banks are going, because frankly, with interest rates so low, they do not make sufficient margin on lending, and traditional banking services that you see in the high street has notoriously been unprofitable for many years. In fact, I even recall, as a young banker myself, going into discussions where the people around me were considering whether to charge people for having bank accounts. Yes, all those years ago, because even then, traditional banking services were deemed what we call clearing a check, which now obviously there's so few of them around, but clearing a check through the system was more expensive than the banks were happy to pay. And they found no real way, until of course now so much has gone digital, of reducing those costs, which is why we've seen so many high streets, back branches being closed, new automation coming in and technology advancing at such a pace. There will be a day where there'll virtually be no bank branch. But we see where this guy could be heading. For them to make him the new boss of Lloyds, which was the traditional, stable, rather typically, shall we say, British bank, moving towards personal wealth management, tells us where they think the profits lie for the future. And we also have hackers steal $600 million in likely largest DeFi crypto theft. Hackers perpetrated what is likely the biggest theft ever in the world of decentralized finance, stealing $600 million in cryptocurrency from a protocol known as Poly Network, not to be mixed up with Polygon, that lets users swap tokens across multiple blockchains. Tens of thousands of people are affected by the hack, Poly Network said in a letter posted on Twitter. But do you know, in spite of this, cryptocurrencies are still, yes, they are still going up. And then we have one more headline, very briefly. Senate Democrats pass $3.5 trillion blueprint for Biden's agenda. Senate Democrats took a major step towards the biggest expansion in decades of federal efforts to reduce poverty, care for the elderly, and protect the environment, passing a $3.5 trillion budget framework that opens the way for President Joe Biden's economic agenda. We are moving rapidly towards helicopter money, if it's not here already. The party line 50-49 vote marks an abrupt reversal from the tax-cutting philosophy of Republicans when they control the government. It provides a path for enactment of a long list of cherished democratic priorities. If the party's fractious progressives and moderates can agree among themselves in the coming months. So, we haven't got time to go into this in any more depth, but the bottom line is this should, more money, be a tailwind for precious metal prices, and we'll have a look at that in a second. Headline on Reuters, again repeating US Senate narrowly approves the $3.5 trillion spending plan. BBC News, working from home job adverts rise. Winchester is the least affordable UK city to buy a home. Not surprised, it's absolutely beautiful city. Absolutely beautiful. And a repeat of the hackers stealing $600 million in crypto. In America, of course, the news really is Governor Cuomo resigning in harassment scandal. It was interesting. I watched his speech throughout, and I don't think he blinked during the whole thing. I've never seen someone with such a stare with so little blinking. It's almost unnatural. Not that that has any bearing on whether he's telling the truth or not, but yeah. And our Prince Andrew cannot ignore the court, accusers' lawyer says. Looks like he's in a bit of trouble. However, whatever happens, however, whether he's guilty or innocent, if he hides in Buckingham Palace, they can't touch him. But we won't go there. Dollar has hit 93. We said it was likely to happen this week, and it's done it in the middle of the week. 93.14, been as high as 93.19, and as low as 93.04. I don't think it's run its course totally yet. Crude oil and natural gas, oil prices marginally down, with WTI at 68.13 and Brent crude at 70.55. Equities yesterday rising again, broadly up to 0.5%. Only noteworthy because we are so close again to all-time highs. Otherwise, we would take it in its stride. Asia markets overnight up again, more than half, but below 1. And Europe, which is trading now, and it's 10.25 as I say this, broadly again up on average 0.25%. Now, economic data. Yesterday, The NFIB Small Business Index for July came in at 99.7 against expectations 102. That was disappointing. Productivity came in for quarter 2 at 2.3 against expectations of 3.2 and against the previous month's 4.3. Previous quarter's 4.3. Again, disappointing. Unit labour costs at 1%, higher than expectations. Good for those receiving their income, but in terms of the cost to business, disappointing. So yesterday, the news was not great, but it's today that all eyes will be set on the Consumer Price Index and core CPI. What is sort of concerning us is that a number of Federal Reserve governors are speaking, and Fed presidents from other states are speaking, and they're all talking about tapering and the potential for it coming in earlier than anticipated. Part of the reason we're seeing the dollar rise. Now, let's have a look at gold. Over the last 24 hours, I'm going to refresh the page because this was done, so it's picking up slightly this morning. And we can see the gold is 1734, so it's up $5 on the day. Still down, though, unfortunately, on the week by a reasonable margin. Ended last week at 1764, so we're $30 down. Nowhere near the, was it $80 that it flash crashed by? Silver was down earlier 9 cents. Let's just do a refresh. It's improving. It's down 3 cents. So it's now at 23.40. That's compared with 24.30 on Friday's close. A lot tells us that we should expect prices to rise a little, but until we see that inflation data, it's a gamble either way. But that launch of the $3 trillion package certainly will help it. And if the economy is improving, but inflation is going down, then maybe, just maybe, we'll see a bit of a fill up, certainly for silver, because that suggests the industrial demand will go up. Cryptocurrencies this morning on another tear over the last 24 hours, up almost 1%. We said don't be surprised to see a $2 trillion market cap. We're now at 1.91. It's not going to take an awful lot to push that into $2 trillion. Right, that's it for now. Our videos we call your attention to. Have a look at why gold and silver crashed on Friday and gold and silver plummet. Further thoughts, just to get a feel as to our line of thinking and why, quite frankly, we mustn't take the gold and silver price for granted. It's very dangerous to do that and to listen to pumpers telling you it's going to thousands and thousands when we all know that's not going to happen. Not this year, for sure. Could it rise further? Absolutely. Could it fall further? Absolutely. But let's dispense with all this nonsense of $10,000 gold and $200, $300, $400, $500, $600 silver anytime soon. You'd need a complete market collapse. And we even saw, just think back in 2008, when the equity markets were collapsing and we also thought all the banking system was going to hell in a handcart, gold and silver prices actually dropped initially. So bear that in mind. Yes, they then rose to all-time highs a couple of years or a few years later. But don't take the price for granted. That's it for now. Give us a thumbs up, please. Subscribe. Press the bell sign. See you next time. Thank you for watching. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.